In this video, I'm going to talk about how this one dividend ETF beats the S&P 500 and the dividend ETF SCHD. So we'll be jumping into all the details of this ETF, including how it functions and performs compared to the S&P 500 ETF VOO and SCHD. VOO and SCHD are two ETFs that have been very popular over the years for quite a few reasons, with each having their own specific strategy. VOO is a staple when it comes to investing, tracking the S&P 500, which is the 500 largest companies in the US, and holding big names like Nvidia, Microsoft, Amazon, and others. And it's had annual returns of over 14% in the last 10 years and over 14.5% over the last 5 years, which is extremely solid, while also having an extremely low expense ratio of 0.03%. This ETF is a stable fund with great diversification and exposure to a variety of stocks and sectors, and it can serve well as a core holding in a portfolio. SCHD, on the other hand, is a bit different. It's proven to be a solid dividend fund that's built on high-quality value companies that have a history of providing solid dividends and dividend growth. It does this with a nice dividend yield of over 3.5% that pays out quarterly, its double-digit 5-year dividend growth rate of over 10.5%, and the fact that it had 13 years of consecutive dividend growth. So it's no joke when it comes to the dividend game. And while SCHD doesn't have the growth stocks that an S&P 500 fund has, it still managed to provide annual returns of around 12% in the last 10 years and over 11.5% in the last 5 years. Its purpose isn't for high growth, but for its more stable, solid dividend-paying companies that it holds. And while these two ETFs are great at what they do, this ETF that I want to talk about does pay out dividends, but it functions a bit differently than SCHD, and it carries some qualities that you'd find in an S&P 500 fund. So let's get into this ETF. The ETF that I want to talk about is CGDV, the Capital Group Dividend Value ETF. This fund seeks to generate consistent income that's higher than the average yield of the S&P 500 by focusing on companies that pay dividends or have the potential to pay dividends, as well as invest in companies that have the potential for capital appreciation. Now, let's get into a quick breakdown on this fund and its strategy. First is that CGDV invests at least 80% of its assets in dividend-paying stocks. It also focuses on larger and more established companies that have market caps of over $4 billion. Third is that it may invest up to 10% of its assets in stocks of larger companies that are outside of the US, and this added diversification is a nice plus. Unlike the more passive funds like SCHD and VOO, CGDV is an actively managed ETF, so there's a team of multiple portfolio managers that manage the assets. And the fund is going to depend on the decisions that those managers make when it comes to the portfolio's investments. Also, CGDV views the S&P 500 as its benchmark, which will make more sense when you see some of the holdings. Now let's get into the portfolio review of CGDV. So this fund has a total of 52 holdings, and as for the sectors that make up the fund, there's technology at top, industrials, consumer discretionary, healthcare, and more. So it has a decent chunk of concentration in tech, and combined with industrials, it makes almost half of the sector percentage of the portfolio. But let's get into where that comes from. CGDV's top 10 holdings are in names like Microsoft, Nvidia, Broadcom, RTX, Eli Lilly, and Meta. It has some big tech names like Microsoft, Nvidia, Broadcom, Apple, and Meta as part of its larger holdings, which have played a key role in the booming growth of the S&P 500 over these past few years. And CGDV's second largest sector, industrials, has also been doing well, which it has a bit of focus more so on the defense and aerospace industries. This is through companies like General Electric, RTX, Boeing, and for other industrial companies, you have names like Uber and Top Build. And similar to the S&P 500, it's tilted more towards large cap companies, along with a decent portion of some mid cap. Now, when it comes to the cost for CGDV, it has an expense ratio of 0.33%. And yes, while that is a little bit high, remember that this is an actively managed fund. All right, so let's get into CGDV's dividends and returns, along with how it compares to other ETFs like VOO and SCHD. And I'm comparing these two funds because you'll see that CGDV kind of fits in a place in between the two, given that it benchmarks the performance of the S&P 500 and it's geared towards companies that pay out dividends. For the dividends, CGDV has a dividend yield of around 1.3%, which is paid out quarterly. When it comes to dividend growth, it has a 3-year annual dividend growth rate of 89.5%. And its dividends have increased every year since it was created 3 years ago in February 2022, so it hasn't been around long, but it's great to see the dividend growth that it's provided so far. So how does this stack up to VOO and SCHD? So CGDV has a dividend yield of 1.3% and a 3-year dividend growth rate of 89%, while VOO has a yield of 1.1% and a rate of 7%. And then SCHD comes in with a dividend yield of 3.7% and then a 3-year growth rate of 8.1%. SCHD comes in with a much higher yield here for a big reason, and that's because the strategy has a strict selection criteria that filters down to companies with solid dividend growth and yields, along with a variety of other measures. For this reason, I don't see CGDV at any point being able to touch SCHD when it comes to the yield. VOO, on the other hand, is the lowest here, but it's decent for what it is. Keep in mind, larger market cap companies make up larger percentages of the S&P 500, so there's a mix of growth, dividend payers, and non-dividend paying companies, so you won't be finding high yield or crazy dividend growth from VOO. With CGDV, remember that its objective is to generate income that's higher than the average yield of the S&P 500 and invest in stocks with the potential for capital appreciation. So its goal is not necessarily to provide a high yield, just one that's higher than the S&P 500, which it has been doing. And the fact that appreciation is an important part of its objective lets you know that it's not aiming for a higher yield that you'd find in an ETF like SCHD. CGDV has had some amazing dividend growth so far, and it's beating out other funds thanks to some of its largest holdings that have higher dividend growth rates. So it'll be interesting to see if it can hold up that dividend growth momentum that it has. The best part of CGDV is when it comes to its performance. Since its creation in February 2022, it's had annualized returns of over 17%, so it's been flying the last few years. And if that doesn't seem high to you, take a look at this. VOO over the same time period had annual returns of around 13.5%, while SHD had returns of just about 6%. So CGDV has really been outperforming the overall market since day one, and the credit goes to its active management. To give you a better perspective, here is CGDV compared to VOO and SHD since February 2022. CGDV has maintained a clear gap over the market throughout its time since the market rebound in late 2022. And if we zoom in to just 2025, it held up very well compared to the other ETFs, and it had taken off the months following Liberation Day. So while the dividend yield of CGDV isn't that impressive, it does make it out when it comes to its dividend growth and performance in the few years that it's been around. Next, let's talk about a few things to consider when it comes to CGDV. So the first thing to consider, and the thing that stands out the most when it comes to CGDV, is that it has high fees. An expense ratio of 0.33% is definitely much higher than you'd find compared to VOO, which is 0.03%, or many of the most popular ETFs from Vanguard, Schwab, and the others. Now this comes with the territory of an actively managed fund, but the fact that the goal of this fund is to beat the S&P 500 in dividends and growth makes it a bit acceptable. The second consideration would be that this fund is a bit top-heavy. With the top 10 stocks making up about 42% of the fund's portfolio, those holdings can play a big role in the portfolio's price movement. It also doesn't have many holdings. While CGDV does have exposure to a variety of sectors, it only has 52 stocks, so it's pretty limited in the spread of the holdings that it has. Next is that it's actively managed, so the performance of the fund is going to be dependent on the portfolio managers. Last would be that it's a tech-leaning fund. Now, while the tech sector has been doing really amazing and still has future growth potential, it has been a pretty frothy sector recently in terms of valuations. This is just to say the fluctuations in the sector, whether good or bad, will have a much larger impact on the fund than others. So should you invest in this ETF? CGDV has shown some truly great results in the short time that it's been around, And it does this with a pretty reasonable cost considering that it's actively managed. The stocks that make up its portfolio are a good mix of value and growth companies, which have benefited nicely during this booming market. And while this fund is considered a dividend ETF, the yield that it offers might not be very attractive to those dividend investors that are searching for a nice yield, especially since it's not that much higher than the S&P 500's dividend. Its key features lie more in its potential for dividend growth as well as its potential for capital appreciation. For that reason, I think CGDV would be best for someone that's looking for a fund that's large cap leaning, with tech exposure, strong dividend growth, and performance that aims to beat the overall market. I don't see this fund as a core holding like a broad market ETF, but more so as one piece to a multiple ETF portfolio. And of course, depending on your personal investing goals and strategy, that'll depend on you if it's worth the place in your portfolio. Now, if you want some other great options for dividend ETFs with solid growth and yield that isn't SCHD, then take a look at this video here. Or if you want to see some of the best ETFs to combine with VOO to build your wealth fast, then be sure to check out this video here. And if you got some value, be sure to like and subscribe. Thanks for watching. I really appreciate it, and I'll be seeing you in the next one.